Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday UTC. Apologies for running a little bit late. Those who know the show know that I'm absolutely useless without my tea, so I do apologise. A meeting overran this morning with a client of mine, or a mentoring student, actually, and I had to get the brew on. So, who have we got? Got quite a nice amount of people online already. Do apologise for keeping you waiting for a few minutes. Craig, good morning, my friend. It's great to see you on here. Burned as well. Absolutely fantastic. What have we got going on with Craig today? Thank you for talking about the 5 minutes on Monday's call to look at Rune. There's a coin that I trade most. Your review confirmed what I was thinking. It was a lovely little trade, actually, wasn't it? Yeah, I think, great shout on that one. I looked into that one as well, and there was some really nice setups on that. Didn't go greedy and therefore didn't take the whole move, but got a nice 7-8% at the 11%. Big thank you. No. Absolutely all you, mate. We can look at these things, but one of the most difficult things in trading, as I'm sure everybody knows, is the execution rather than the TA. So you've always got to give yourself the credit for that, guys, when you're taking that. For me, hey, buddy, how you doing? Great to see you on the stream, seeing some great familiar faces and also some new people as well. Just huge shout out to everybody as well. Bernd, can we look at dollar index first for risk on off bias? We absolutely can, mate. In fact, this stream is all for you guys. So we can look at anything that you would like to. Basically, just going to dedicate the next hour to you guys. What you want to look at can be any asset, be FX, legacy, indices like the S&P 500, NASDAQ, Dow Jones Index, or obviously we can focus on crypto and bits and pieces as well. But that is a great shout, and let's turn our attention over to the DXY. So let me zoom out and show you my thinking here. This, by the way, was, I think, quite a brutal move. So I think this is when you hear, and I know I go on about it as well in terms of manipulations. Just to clear this up, guys, for me, I'm not saying that it's like, some secret government plot where like the banks are in cohesion and they're all making these moves to just mess about retail. I think that retail and other funds and other people make themselves prime for the taking sometimes. And I think that when these manipulations happen, they're designed by the markets, market makers, the players within there to generate liquidity, right? And I think it's no different than when we see this. Let me just get rid of my mug on here and let's have a full screen. So the reason that I'm bringing that up is because this trend line down here, right? Now, I like, when I'm taking a trend line, I like having two key anchoring points, right? And then, because, you could move this around and say, for example, like, oh, okay, well, actually, if you took it through the bodies of them, you took it through this one, you would have seen you had a cleaner kind of break and retest here. And I think it's absolutely fine. Anything I've always studied has always said that as long as you respect and you repeat the methodology that you use, where you're anchoring from, you can either find a line of best fit, but the rules that I've always stood by is that you don't want to violate the bodies on that second touch, right? Because then when you do get the violation of the bodies, you can see it as a deviation or a breakout and a retest, yeah? But for me, I like to kind of find two key anchoring points like we had with these ones here and here. And I'm not using these to trade on the retest and bits and pieces, but what I am saying is, look, resistance from this area, resistance, tried to break out, force back below, deviation, came back underneath, then we had the breakout, retest, and price came up. Now, price ultimately broke back down here, right? And now, I don't want to jabber on too much about this, but I just want to give you the idea around why I've got these levels on the chart, okay? So this is a hugely key level for me, January 2017 tie, right? And actually, many, many years ago, when I was just absolutely obsessed with studying Trader SZ, this is one of many incredible things that guy taught me, which is that looking at key highs and lows of years, months, etc., they typically represent key areas, right? Like this was a massive high, this. Why? Because when we took out these equal highs here, we set this high. This high was absolutely untested. We broke down from here, right? This origin of the breakdown, if you like. So if we're looking at this being the sweep, this being the high that swept the low, the origin of this breakdown has proved really, really pivotal, in my opinion. Whenever we revisit an area like this, it gives us a good opportunity to check our charts on the lower time frames and look for opportunities to trade away from it, because there was obviously a lot of selling pressure here in the first place, henceforth the origin of the breakdown. I just want to see a sweep, then the low that sweeps the high, broken, and an impulse move away from it, and then treating it in a similar way to we would with an order block. Yeah, so like with this one here, I'm looking for the last high volume up close candle, and then I want to see price move away and then a retest of that area. When I'm looking at it historically, obviously if we set this and then we move away, you would monitor this area in real time to see if there was a reaction. But as we're looking at this as historical data, we're then extrapolating that forward and seeing if that has any significance, right? Which we can see here that it does. Because this was a key point here. Price broke this, set this higher, sold off, retested it, sold off again. Found key resistance here, which led to a big sell-off that led to us all the way down to the liquidity resting in this order block down here. Right, we've then re-established bullish market structure above here. We've then run up. Notice how price rejects here, but notice this time how it just carves through it quite easily, showing us that there's limited resistance there. Now we're looking for it to be retested. Yeah, get back in structure, so take out this high. And then there's a number of different entry techniques. You would use Fibonacci's, you could use your bullish engulfing candle that's here, right? That's just to give you guys an idea of why those levels are there and why we're looking at them. I don't obviously keep them all marked up all the time because I feel like it makes the charts a bit messy, but I think we want to be aware of them. Now, for me, what was significant here is that we've not really had any key closes below this level. We had a little one here where it kind of peaked below, but very quickly got back within, filled this inefficiency here. So for me, I think if the dollar's looking to break down further from here, then we'd want to see, and I'm talking about a significant breakdown, I think we'd want to see this kind of scenario happen, all right? Because then we're coming into some territory where we're then looking for, ignore that last bit, but this kind of move here where we're then coming in and we're then looking for it to move lower. Where we are here is quite a key point for me because if we reclaim 2017's high, then I think we can see risk assets start to bleed out a little bit here, unfortunately. I think bullishness here, obviously, we take that as pseudo being bad for risk, okay? So because the dollar and the dollar index represent that kind of flight to safety, right, when we're on a risk-off environment, strength shown in the dollar is normal counter correlated that to risk assets such as Bitcoin, the S&P 500 and the NASDAQ, all right? So while we're looking at this, that's to just give it some context. We're back at 2017's high, right? Now, this rejection that we've seen coming back here on a weekly basis, when we now drop this to a daily, we can see the nice kind of bit of upside that we've had, right? Price had this kind of little renaissance here, pumped back up, and we saw a bit of shaky ground, right? But there was still a lot of strength in risk assets. Now, when we're pulling back here, showing this little bit of weakness, right, on a daily scale, when we throw ourselves over onto this, we can see that's been reflected by a little bit of bullishness here in Bitcoin, right? So that's the reason that we're studying the DXY. Now, you have to bear with me a second, guys. It's internet's running a little bit off pace here today. Here we go. So now we've come in and we found support here. We've reclaimed this area, right? So this is holding as it is, but we've also rejected from the underside of the 2017 high. Now, what's important here is this is the first real key retest we've had here since we broke down, right? Support, 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 deviation, Price breaks up, strong candle close above, and then we're looking at prices moving up. Menos, my man, how we doing? Can we have a look at DMTR USDT? Of course we can, mate. You do always find some lovely obscure ones that I'm unaware of too. So let me know when we get onto it after the DXY, and that's the first chart that we're going to take a run into. All right, buddy? So at the moment, we're rejecting from here, but there's no doubt that this is starting to get a bit bullish. Now, it depends what your read and your terms are on market structure. For me, a swing high or a high is represented by a high that's flanked by two lower highs. A low is represented by a low flanked by two higher lows. So we get that V shape here, and we get the V shape here. Now, what I'm looking for here is some form of significant move. So if we've now taken out these lows on the DXY, for which they are multiple, let me just make that a bit thicker. We've swept these lows. The origin of the sweep is this high. Okay? So if we want to be bullish on the DXY, then what bulls on the DXY will want to see, yeah, or people that are anti-risk, is something like this, right? And that's this high hold, right? Because this forms like a base, yeah? I always used to call it a breaker block, which is when we see a manipulation one side, price breaks out the other side, and then we see it retested as support. There's a guy that I got introduced to last year. He's a fantastic trader, an Aussie guy, I believe, called SMFX. He calls these a base, I believe, something similar to that, and a very similar kind of theory. The idea that when you see the sweep, the break above, this is almost sort of acting like your order block, right? Because this is the origin of that impulse move higher. So if we want to see more downside for risk, yeah, then this is the kind of scenario that we want. Should obviously make that green, really. Yeah. However, if we want to see more upside for risk, we want to see this continue, yeah, and for something like this to happen, right? Now, I'm not in the habit of making predictions. I look at the charts, see where the key points are that I'm interested in, and then from there, I'm looking and waiting for the market to confirm a direction for me. All right. So in here, for example, I don't think we need these on here now. I think we get the point, don't we? So here, for example, we're building a situation on a 4 hour that's slightly different, right? Now we've run a key high here, being the 2017 high, right? Now we've seen price run in, sweep liquidity, break below the low that sets the high, right? Again, I used to call this a breaker line, but I think with breaker blocks and that being so prominent now, I just tend to use clearer kind of terminology, right? But the idea of it is that once we form this consolidation, the manipulation, the break below, the close below, which we see here, it's important. It's not this candle, it's this close. The retest is then when we would sell this lower. And then looking for downside targets, we got to be saying to ourselves, okay, well, where would we be targeting? Yeah, we know we've got this level here that we'd be interested in. So I imagine we see price pull back into this region. Yeah. The other area we'd want to be aware of is this fair value gap, this inefficiency sat in here. Yeah. So we could see price do something like this, where it maybe comes through this level. Yeah. Everyone starts to fear a little bit bearish. Yeah. And then we see a move like this that reverses it. All right. You have to forgive the squiggles on the higher time frames. They're not as clear. But come in, feel the inefficiency. What have we also done? We still retain market structure here. Yeah. And the other thing that we always want to consider is our Fibonacci, right? I don't know whether I've just been doing this too long or whether that was just luck. But the idea is we would be looking for something like this, right? A sweep of this golden pocket. Now, I don't think that's really showing up very well for you guys on there, is it actually? But this is the 618 and the 0.66, which are the levels that I use to define the golden pocket. Once again, we would be looking for the lows to be swept, the highs that sweep the lows to be closed above, in which case then we'd be feeling more risk averse should we get this. But while price is kind of investigating lower, trying to find liquidity, then that's what we want to be looking for. We want to be looking for risk assets to be doing quite well at the moment because we've got this little pullback. Now, there's nothing to say that the market won't say, look, to hell with your theories. We're not listening. We're going to go and do what we want. And that's something really key to accept, right? Is that markets will do what they want to do. What we're doing is we're building strategies based around probability, okay? And that's the key thing. Now, excuse me just for a moment while I pour out my tea. Perfect. Good brew on that today, guys. Back to the Yorkshire tea, thankfully. So, Imran, my friend, welcome to the stream. It's good to see you. Long-time friend of the stream. Thanks again, man. What are the top indicators that you are using? What do you mean by that, mate? As in terms of, I've got the main indicators that I use, really. These are all just levels that I've drawn in, right? Or in terms of indicators that I use, I've got some on trial that I'm trying out with some different people. I sometimes use moving averages. I can find they can be quite helpful when we're looking at, on a daily scale, for example, I'll often have the 20 and the 50. Yeah, so we can see here while we're under these, we can see again, look, just for a bit of confidence, this red dotted line coming in is what's suppressing the price. And then if we were looking to the 20, which is the green dotted line, that's where we might expect some kind of support. Yeah, so that's kind of what we'd want to take into account. I always use my B Pro. I mainly use B Pro for its divergences, yeah, which we can see here, catching these corrective moves, lovely. Then the beginning of this correction, and then this one here showing us that we're probably in just for a little bit of a pullback at the moment. And the other one that I'm using that's on here is this index sessions by a guy called Dr. Fuse. Okay, I don't have any affiliation with him. Seems like a really nice guy, good trader, makes some wonderful indicators. And this shows us, as I'll show you later, what our kill zones, because I like to trade the New York session typically. That's my favored trading session. All right, mate. Apart from that, there's not really anything on there. Leanne, pour me some tea. It is right here for you. If you can hear my nice, cheap, cheerful catering kettle. For anyone from the UK or familiar with being here, I'm sure you have them on the continent as well. It's just a little kind of silver pot that makes you basically 2 solid cups of tea. 1 tea bag in there, nice 6 to 10 minute brew. Perfect. Ken, smash the likes. Absolutely, guys. Really do appreciate it if you do. Only if you like the content, you like the show. Helps Google pick up the algorithm, which just means that it gets it out to more people. But thank you very much, Ken. It's very kind of you. Norbert, do you watch monthly central pivot range levels? I don't actually, mate. So what I pay more attention to are the EQ of ranges. So I am very heavily trade inside bar ranges or ranges that are set. When we look at them, you have a large drop. You take the keys. Let's say, for example, we're in a downtrend. We take the key point of the drop. In fact, let me show you what am I doing trying to describe this rather than just showing it to you on here. So what you would do, let's just use this for an example. Yeah. Now I'm setting ranges typically based around candle patterns, which I'll show you as well. But you see this move here. See, we have a large drop. Yeah. What I would be doing is on this drop, I would take the low of the drop. I would then wait for a key high to form. Right. And then that makes the range. Let me just make that a bit thicker for you guys, actually. Yeah. So what we'd be looking to do is we've set our range by the low. We then come up and set this higher. What confirms this higher for me is the fact that we then test the midline. We then lose the midline here, sell off to the range low. Deviation, come back within the range, target the midline. Midline to range low to mid, which we fail here. Not a problem. Like we say, obviously, if it was that repetitive, everyone would be billionaires. Or actually, no one would have any money because there'd be no money in the market. Then we see we get this deviation. Price closes back within the range. We get this nice retest here. Price travels up. First target's always midline. And then we're looking for range highs. One thing to remember, guys, when you're trading ranges, is that you want to be aware of your order blocks. All right. Now, I allow for the body in the order blocks, but what I'm looking for with a key order block, let me just mark the whole thing in just because otherwise it'll be really, really small. But what you're looking for here is price to move away, and then you ideally want to see a retest of it to give it extra validity before it then moves off again. All right. So to use an example on the downside, we're looking for the high volume down close candle here. Now, if we have a series of candles in the move, right, then I make an allowance for the series of candles. Then what we do when we're drawing this across is we can see here, price comes up, we get this immediate retest, which we really like, retests it again and again and again, comes into it here, deviates, breaks through, retests it again here, showing extra validity, and then moves up. These can help us when we're looking to trade away from them as well, right? Because if we're looking at it here, we can see we get the deviation, but then price comes back in, right? We start to retest it here, which is fine, but then we don't break down below the low. We then break back above it, and that's our signal. We're then looking for it to be bullish. However, when we invalidate an order block, we close below it here, indecisive candle, big bearish engulfing candle here, consolidation, and we move away from it, all right? So like anything with order blocks, we're looking for these to be SR flips as well. So in terms of that, Norbert, I hope that answers your question, mate, but that's more what I'm looking for in a range is I'm looking to take the range and then for the EQ to be that equilibrium, that 50 line to be the area that we revert to. I know you're talking about this on monthly levels, CPR, like central pivot ranges, but I don't use them. I favor just using those based on either candle patterns that are set from inside bars or from ranges that are set basically after we have a large drop. We look at the large drop here, we see that, we don't get a retrace, we come back down, larger drop down here, then we get a clear retrace up here, in which case that would be the formation, the start of the low of our range. That would be the high. Yeah, we would draw that in like this. And it just gives us a real basic level and guide that, okay, we see how much action the 50 line holds here. So we deviate the lows back to the 50, deviate the 50 back to the lows, deviate the lows back to the 50, 50 to the lows, lows to the 50. Obviously, then we have this deeper deviation. Why? To take out all the liquidity from before here, before price comes back in, closes within the range, and we ultimately attack range high. All right. So I hope that's been useful for anybody on there. Norbert, you're absolutely welcome. I hope I didn't make a pig's ear of that. So what are we looking at the moment? Well, we're in a bullish structure for the DXY, right? So everything has to have context. We're in a bullish structure, but we've had this kind of micro breakdown. Now, we need to really be taking out this low here to get any confirmation. And when we do that, we're coming into this potentially key area that we could look for support. I'd be focused quite heavily on this here. And obviously, if we return to this and we start to run hot, then I think we want to be moving really risk off. All right. But while this is continuing to move down, we're looking to favor more bullish setups. But overall, we have to be bearish, right? Because the DXY is bullish. Does that make sense? Now, if we're looking at correlated assets, and we are going to slide onto that DMTR in a moment, Menos, do remind me if I forget, then when we're looking for context, we want to see the ES bullish, yeah? So once again, let me just close this up quickly. What we're looking on here, and forget that cluster of stuff in there, it's just a lot of low time frame trading examples that we took with the group. So we've run liquidity here, got into this bullish posture, taken out these highs, we're continuing higher highs and higher lows, yeah? Now, we've set this higher and we've run into this key level. So this is a daily liquidity level, right? Above daily levels, daily swing highs, and below daily swing lows, we expect there to be liquidity in the form of stops, as in stop losses, also in the form of breakout traders' orders. Now, if you've got a really, really large amount of money that you want to bid or ask or put on a trade with conviction, then you want to know that there's enough there to fill your orders without you suffering slippage, right? So the idea is that you force price up in the best way that you can above a key level where you know there's going to be a lot of orders, yeah? Because people that were short here have their stop losses here, yeah? And these stop losses are buy orders, right? If you want to sell with a large volume of money, you need a large volume of buyers. How do you get to those buyers? You target their stop losses, or you convince breakout traders that they want to buy here because we've broken this SR level or this key swing high, all right? Then if that is the case and price is ready to come back down, I would be looking at this first of all and saying, okay, well, if this is the order block, the key order block, because it's a high volume candle, yeah, then I'm only making the allowance for one candle. If I get a series of low volume candles, yeah, then I will often cluster those together to give a broader range of where the orders can be. So now we see we've had this, price has moved away, yeah, set this interim low, yeah, interim high, broken that. We're not really going to be getting bearish until we really break below these lows here, because then we would have the low, lower high, break of that low puts us into a bearish posture. But what we're looking for here is for the order block, yeah, to be respected. We're also below that daily level as well, all right? So in terms of then what I'd be looking to do to just move this onto a frame of execution, so for example, when we're down here, right, I'm going to show you this because then I want to show you basically the reverse for when we're going long, right? So I'm always looking left. Now, if my belief is that price is being drawn to this order block up here, yeah, then we're down here, we see our lows, we see we've got key lows swept here, yeah? Now, what I'm trying to look for is I'm trying to look for the origin, for the order block, yeah, or order blocks. So the down move, yeah, that has led to this move higher. Now, typically you will look for these on your higher timeframes and you work your way down through them, right? But even if I was taking the absolute purest one here, which is this down candle, and why have I selected this one? So the last down candle before the shift in market structure, and because we get an impulse move away from it and a retest of it, that retest means a lot to me, and this secondary retest means a lot as well, because it offers validity in terms of it acting as support. Yeah. Now, this was a particularly nasty move below, and you can see just by how wild this move up and down was. Yeah. Typically, when you see these, not always, they can be either driven by news-based events, right, or typically thin or relatively thin liquidity, which I don't think is the case on here, because we've got, obviously, ES is typically has very, very high volume and liquidity. However, we can see that then when we revisited it here, my bullish bias is intact, right? For me, how I trade personally is I need to see a key form of support or resistance interacted with, be that an order block, be that a breaker, yeah, or be price running a key high time frame swing high or swing low. Then what I'm looking for here is I'm looking for a reaction in here after a sweep, right? So price has come into the level here, right, and told us as it comes in that it's getting a reaction. That isn't enough for us to understand whether price is ready to move here or not, right? What we need to see is something a bit different. We want to see a sweep followed by a break in structure, certainly a shift in structure, right? So here's our sweep. Yeah, that's key lows here, swept by this low. It's then this low here that sweeps this low, right? Because what we need to see for validity is we need to see a break of the high, right? So we've got our low, we've got our high, lower low. Break of this high here is when I'm getting interested. Because remember, we've got our high time frame bias, yeah, which is bullish. We then want to see price break above here, which we get. I wouldn't particularly be interested in entering this break above just because we simply didn't have the displacement. I'd want to see a candle like this, yeah, move up and through the move. Now, we didn't get that in here. Had we had a stronger close here, then I'd be looking for an inefficiency in here, or I'd be looking to trade the breaker, yeah, meaning the last up candle before the purge on liquidity lower, yeah, which would be represented, certainly how I trade them, by this. Right, and if we'd had more conviction moving away from this, I'd then be looking to enter on this breaker. I would always favour a fair value gap, but if we don't have one in the move, yeah, then we look for the breaker that leads to the liquidity sweep, and we would look for a retest of that. However, like I say, I have to be honest with you. I'm always honest. I wouldn't have entered this because I would have wanted to see more of a close above that level, all right? Then we reach a point where we're into the secondary phase of the move, right? And if you want to ever get on board with a move, because we've got a clear upside target, right? You never want to be chasing trades, but if you don't get your initial entry here, right, and then you're looking, your conviction is that price is running up to this order block here, then I would be using Fibonacci's to get back on board with this move. I would first of all be doing my standard entry technique, which is where I'd be looking for the break of structure with the impulse move, and then I would require a retrace into this fair value gap, right? And I'll tell you as for why this wouldn't have worked for me is because I take the high of the move down to the origin, which is here. Let me just draw that across for you. And using an ICT concept of premium and discount, which I use a lot in my trading, I want to be long from this red box. And as we can see, we just didn't get the pullback. We did get the pullback to the inefficiency, but if I don't respect my premium discount, right, then if I'm entering a position up here, I might get a much better entry down here, yeah? Or if I'm up there, I'm completely killing my risk to reward, right? So when price then runs higher, right, if we look across here, we've got these highs here that haven't been swept, and they are also being controlled by this order block. Now this, yeah, we see this here, make that blue. This here to me, right, isn't of much concern at this point because first of all, my bias is bullish. At this point, I've got the bullish momentum building. Now, if I wanted to enter this with the conviction that we were coming to here, I would be very aware that if we reject anywhere, it's going to be here. So I'd be looking to enter a position on this leg up, yeah? So I would be doing exactly the same. I would either be using my premium discount, yeah, origin of the move. Here's our fair value gap. This is the portion of that fair value gap that sits within discount, yeah, which is our red box here. So this is where I want to be long from with my stops under the swing low. Yeah, because then I know very quickly that I'm wrong if price comes below here. Yeah, so that's there. My entry's here, and I've got a clear upside target. So when we look at that in terms of risk to reward, right, we're looking at a very nice setup. So if we take the risk, we want the reward to be there, right? Because it is a higher risk trade because we haven't got in at the origin. Yeah. Now, the other way that I would trade this and how I would be more favorable towards this is just by simply using Fibonacci's, right? Lock onto the bottom of that. Traditional Fibonacci's, right? And then I'm just looking for the golden pocket between the 618 and the 0.66. All right. Now, I'd only enter this with a half position size because we're basically going directly into something that could be resistance. So either we reject here, come back and take the stop loss, in which case I'm wrong, or we run up here and have a nice 5R trade. All right. So that, guys, just to give a little bit more context, is what I'm looking at. So now we're going to spend the last half of the stream ripping through some requests. Okay, if we've got them, guys. So the one that we had here, and by the way, Imran, just to answer I hope that answers your question, mate. I use the B Pro, which is my main indicator, which is from the Bird Nest, the description for how you can get access to that. And we've got some really cool ideas coming up as well on there. Yeah, with how you can get access to that. And we might even be doing some giveaways and stuff. So do keep an eye on there. But you can find out more information on the website. If it's not in the description, come and drop me a message on Twitter, mate, and I'll send you the details. Apart from that, just your moving averages and your more kind of basics, all right? Apart from that, I'm literally just using price levels, ranges, and then price action, all right? Now, let's try and find this one. What was it called? Bear with me. It is DMTR. So one of these spot ones, yeah, I would be thinking probably the KuCoin one, Menos. So let's have a look at this. I absolutely love this because this is naked chart territory for me. We can go top down and just go mad. Brilliant. Some other suggestions in there, guys. Let's have a look at those if we've got any that come across, or, you know, we'll rip through this one and then we're going to try and make time for another one or two more anyway. So do keep them coming. Now, let's dive out to our weekly first of all, right? We can see this beautiful rounded bottom, this huge pump back to the upside. Where are my key points of interest here? Well, this swing higher that I think we've just taken out would definitely be one. So we're going to mark that up. That's weekly liquidity. So we've got a key weekly level there. Beyond that, I mean, on a weekly scale, it's this. Right. The Sun City's Finest. That's an awesome name. Sun City in South Africa was probably still to this day the very best golf course I ever played, and South Africa is still one of my favourite places in the world. And I absolutely didn't get to BTC, mate, no. So do give me a shout. I'll make sure to cover BTC before we finish this stream off because it's so obviously important to the others. So real basic levels here, yeah? Weekly level, weekly level. When I'm looking at this, I'm saying to myself, okay, what's potentially capping the market here? We could be looking at this here, right? So we've got an order block here. If we draw this across, we can see that this here, when we broke down from it, retested it once, sold off, retested it against here, sold off. We've now interacted with it again and sold off. So I think that's a really key thing to have on there. So OBW, to mark that in. I'll bring that a little bit closer because otherwise when we draw through the time frames, these levels are going to look a million miles away. All right. So then I'm looking on the daily. We can see we've got a lot of clear sky here, right? We've got our key order block here. On a daily scale, it would be a slightly larger one in terms of this one. And you can see, actually, I'm not going to draw it in because we're going to give favoritism to the weekly one. If I was looking at this here and saying, okay, well, where's the order block that's probably suppressing price on this scale? Price sells off, retest it, sells off again, retest it again, sells off, and then ultimately leads to a larger sell-off, all right? So I'm looking at that there. I mean, what is kind of these really big, fast moves up, right? The only thing that we have with these is we real struggle to get kind of like any kind of range boundary, right? So if I'm looking for kind of like a pivot level here, where was the key point of support and resistance flip? For me, I know we've kind of traded beyond it, but this low, because the order block that sat in here, this down candle, I think is significant. I'll show you for why. If we look at the down candle here, right, this was the origin that was then retested, price sold up, yeah, came up to here, came back down, retested it again. Then when we saw price really melt through this and have these retests and then sell off, we then see it happen again and again here as well. Now, I suppose the argument is we'd maybe want to see this hold as support here, right? Because when we look at it across here, we can see the key interactions that it had. It was the origin of this move higher. It then acted as support here, right? Then when we've broken through it, we've seen resistance, 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 sell-off, resistance, 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 sell-off, resistance here before a larger sell-off. The fact that we're probably coming back below this now, let's just over ED, would be something that I'd be very conscious of, right? Because if we come below this, retest it, and then look to sell off further, then I think that's where we could be. I've not got a clear range set here, is what I would say on the 4 hour. So let's set our inside bar, on the daily. Let's set our inside bar on the 4 hour. That's our inside bar high, inside bar low in terms of the pattern, because that's actually our mother bar, yeah? Our inside bar is the following candle, which is confined within its range, which is what we're doing with slightly smaller, slightly thinner lines, sorry. Now, the principle of this is we treat it like we would any range, right? We take this from the high to the low. We draw in our midline, right, which I'm doing for the mother bar, right, which is the larger of the two candles. So this is currently what's holding price. Now, how we trade this pattern is like any range, right? So when we deviate, yeah, meaning we try to break out of a level, first of all, it's the inside bar. We try to break out the inside bar, we close back within. On the lower time frames, we then trade to the midline to the low, yeah? If we deviate this low and close back within, then we target high. We target the midline of this range, yeah, which isn't drawn in yet, and then we target the high. Now, when we have a strong close, and you'll hear me use that term, which sounds like a bit of a BS term, but it's not. In my mind, what I mean by strong close is we want to see a higher volume candle, so the body has to represent more than the wicks, yeah? Now, although we've got a longer downside wick here and a little wick here, it's not as clean. What we can see is we get this close here. Price opens here, yeah? Travels up first, which is what we want to see from our bearish candles on the higher time frames, is price to travel up. You can set your positions before it then looks to take out the low of the prior candle. Now, if we're playing that in the same vein, price has opened here, traveled up, yeah? So again, lower high, lower high, lower high. Now we would target this low, right? Let's do this a different color actually, so it doesn't get too confusing. Do this in purple. We would look to target this low and then ultimately the mother bar low, right? What would happen here is one of two things that we're going to be interested in, right? Which is we either purge down here. No, it's not going to work on this time frame, is it? We either purge down here, quickly get back in the range, right? In which case then we target this first, yeah? EQ. If we hold above this, then we're looking to travel to the highs, right? Now, that's the bullish scenario, yeah? The bearish scenario would be if we hold down, purge below these, retest this, yeah, and find confirmation below these lows, right? Then I'd be looking for price to go lower, showing that we've got a support and resistance flip of this key order block, right? Now, if we move this down to give ourselves a bit more data, right? So I'm now down on the 5 minute. this is how we would play it. Yeah. So we're always looking for interactions at our extremities. Yeah. That's we want to see price either reject at them, reclaim them, and use them as a base of support to move higher or as a base of resistance to move lower. Yeah. But our patterns always remain the same. This is our raid, meaning that we've taken out this level here, which was caused by this high. Yeah. So then we're saying to ourselves, okay, from here, we have a high, a low, lower high, break of this low. Yeah. Is our change in market structure. Now, when we get the break in that low, let me just make that red. We're looking for a retrace to a fair value gap within our premium discount, right? So our fair value gap that we're targeting for our entry starts here, but finishes by the time we get to the red box because we're short from the green box only. If we were to extrapolate this across, it's just very, very simply this high, which is the origin of the move that broke structure, yeah? And we stop it when we get our first up close candle in the other direction. Our entry would be here, our stop loss above these highs. These highs if you're very aggressive, right? Or mainly these highs if you want to be a little safer, especially in crypto. And then we're simply targeting down here. We've got our key level here. If we lose this as we do, structure gives us no reason to get out of this trade until we get to about here and we start breaking these highs, in which case we could then look to scale out. All right. So that's how I would be looking at DMTR. So Menno, I hope that's answered your question, mate. I hope I haven't gone too fast on that or maybe too low a time frame. But for me, in terms of the read, if I was looking at this more as a high time frame trader, I'd be looking at the same thing, but saying to myself, okay, this is our high time frame level that we've just swept. We've now broken down, set the low, lower high, lower low, purged out the highs. So the key point of interest for me are these lows, which we're currently retesting. Now, I would be hesitant to jump into shorts here. I think I'd probably look more to jump into shorts if we were coming down from here, right? So if we were coming down into this level, you'd want to see a little bit of a move higher, purge down below, retest, and then I'd be saying, okay, at this kind of level here, I mean, obviously there's tons of liquidity untapped under all these kind of micro lows that we've got here, and then this kind of cluster of liquidity that exists over here, right? Under all of these lows. Forget that rubbish drawing. But you see what I mean, right? This area here. So that's how I'd be looking to play that, mate. I hope that's answered your question. If it hasn't, do let me know. I'll happily jump on. And now I'm just going to move on. We'll go back to our daily chart very quickly. And let's look at another one, I believe. Fermi, is that a... Can you just flip us the handle for that, please, mate? AR or R-Weave? Or let me know what that one is. We'll just take a very quick look at ANKR. Yeah? Great, you're welcome, Meadows. Glad it helped, mate. Let's take a quick look at ANKR. Yeah, Fermi, let me know, buddy, if there is... If I've got the wrong end of that R-Weave, sorry, or if that was something else. So, we're looking for now, ANKR. Here we go. Just check the comments very quickly, see where we are. Handle. Yes, sorry, Fermi. So, sorry, up in the comments earlier, you mentioned AR or R-Weave. I didn't know if it was something you wanted reviewed, mate, in terms of a token, in which case, you see like below, like ANKR is ANKR. It's more of an old school term, but it's saying the handle is basically what the abbreviation term is that we can search for. Like Chainlink is Link, Bitcoin is BTC, that kind of thing, mate. I didn't know if you were talking about that might be like an indicator or something. Oh, sorry, it is just AR altcoin. So it's AR USDT, is it? Or AR USDTP? No problem. We'll take a look at that after this. So very quickly, here we are on ANKR, right? Now, we can see here that we've run this weekly high, which is what's currently capping the market. All right. We've got this weekly high slightly above it here. So within the realms of these weekly levels, if we're going to look to reject anywhere, I think that would probably be the kind of place that we're going to look to do it. We've come up and filled this inefficiency. On a weekly scale, obviously we've got resting liquidity above this high here, right? And then where we haven't seen an underside retest of this order block here as well, I'd be looking for that to cap the market. So let's just pop that one in there and make that known. I do prefer to see order blocks like that when we've already had a retest of it, maybe here. Gives it a bit of extra validity to me, but this could be the first retest, so we're going to OBW. In terms of the structure, we swept the lows here. The high that swept the low got closed above and retested here, which is kind of providing the base for which price is being supported on. So let me run that back so that's not total garbage for you guys. That means this was the sweep. This was the high that swept the low. Yeah, the origin of the move. Now we'll do this in green because we can see as we've come across here how price has closed above it, found support there, and then moved higher. So that would be a key downside target should we move lower. On a daily scale, I really want to kind of see this. We've got the weekly order block here. This daily order block is this one in here, although actually something that's really interesting me here is this one. And I'll tell you as for why. This one was obviously of great interest as well. So when I'm looking for an order block, right, in this case being a down close candle, I'm looking for the origin of this move, right, which you could say is this here. Yep. But first of all, we had this order block in here, right? Price came down and we didn't really retest it. Plus, it's a really, really big order block, right? So for me, I'm looking for something that's maybe got a little bit more validation to it. Moving to this order block here, what interests me here, and because we've got a secondary order block here as well, we can draw it down to this candle. So how we get this, if we look at it at the first candle, we get the order block. Let me zoom in a bit for you guys as well. We get price sell off, close below, retest, and then aggressively sell off. So for me, that has a lot of validity. Now, at the moment, we're running that level. We're showing strength in there at the minute, but we're taking out and we're arguing a little bit with this weekly level above. So if I'm looking at this and saying, okay, if we've got a range-based situation here, again, we're probably struggling a little bit on a daily scale to kind of put that in. So I'd look more towards a 4 hour. And I'd be saying to myself, what's really capping the market here? Where's the key low? Where's the key high? As in, where was the key low set that price has really struggled to get below? Yeah. Or if it has gone below and it's come back up, then exactly where has that come to? So really kind of throwing this out. Roughly, we don't have a clean inside bar, right? Because this came back above it. We have this inside bar pattern here, this high to this low. So this would be valid in terms of looking for a 4 hour range. So we can see here as price came in, deviation closed back below, first to the 50, then to the highs, deviates the highs, holds at the 50, back to the highs, deviates again, back to the 50 again, 50s to the highs, highs to the lows, the difference here being higher low, yeah. Break of this high and the range, we get our retest and price moves away. So that becomes a viable target for the downside, and also one that we're saying, okay, well, if price comes back within this range, if we do break down here and price comes within the range, we can expect price to go to the 50 and then to the low, all right? Now, where we are at the moment, at this key point of rejection, it's very, very difficult, right, to say what's going to happen with price here because we're bullish, right? We're bullish on this scale, but we are interacting with a key high time frame level for which we expect some kind of reaction. So if I'm looking at the leg up, right, then the top of the range around this part has quite a nice confluence with the Fibonacci, which is right basically on the line of the bottom of this order block and between the top of the range. So I can get rid of that now because I can get rid of this now because I've got this area that I'm targeting in here. Yeah. So if price is looking to break down further, that's maybe something, and an area we can target. If I'm going to an executable time frame here, right, and then we're seeing this play out, if this was within a kill zone for me, a tradable kill zone, I'd be looking on this time frame for price to break down here. We've come in this level, we've now closed, broken below it. Yeah. If this was in a tradable session for me, once again, I'd be looking for the same things. I'd be looking for highs to be taken out, which we get here, the low that sweeps the high to be closed below, and now I would want to see price retrace to an inefficiency in here. All right. I actually think on this instance, if this was within my kill zone, I don't think we would have quite got the retrace. Let's have a look. From this high down to our first up close candle. No, we don't. Just draw that in for you guys so you can see. Obviously no system's perfect, right? But for me, I would have wanted to see this retrace deeper into here, into this fair value gap, right? But there's no doubt that this is looking to obviously correct a bit deeper. So let's go on to a slightly higher time frame and say to ourselves, where's this correcting to? So we can see even on an hourly, we're still holding structure here, right? Higher highs, higher lows, higher high. Again, we kind of want to say to ourselves, well, if this is the origin of the move, of this leg up, and we flip this to our Fibonacci, see how we're kind of moving through the 618 at the moment. If we really much move, see the void that we leave down here, or that we leave on my Fibonacci's anyway, because I don't put those lower levels in very often. If we hold this and we start to build a structure here, then we might see this, you have a little liquidity sweep there, come above it, give us a chance to scalp higher and say that we're maybe looking for liquidity further above, right? However, if we don't, and we really kind of carve and hold below it, start coming into our kill zone session, which we get into shortly. We see this sweep, we see price break down. So we're looking for sweep of a high, and then the origin of that sweep to be closed below and retested. Well, then we've got some nice clean downside targets, right? Residing in these lows, and obviously the top of the range here as well, which we'd look to get retested. All right, guys. So I hope that has been helpful on ANKR. Let's do one more, and then we're going to finish up on Bitcoin, guys. So I did promise Fermi that we would take a look at AR. So let me just try and find that. Here we go, buddy. Yeah, that's the one, isn't it? R-Weave. I'm not sure what you're trading this on, but okay, it's actually on. It is on Bybit as well, isn't it? AR USDTP. Right at the top. Here we go. So, very quick top down, and then we'll finish off on Bitcoin, guys. Yeah. So this one's slightly different. Yeah, we haven't seen this one run key highs, right, on the weekly scale. There's actually a little bit of room for this one to move. So we'll mark it up as we did before. Right, this represents our weekly level. So that's the draw on price up here. We can see the beautiful sweep that we had of the lows, the origin of that. Yeah, so sweep, which was here. Origin of the high that swept the low, which is here. Once again, we can see how nicely these moves, when they're broken above, you take out liquidity from the lows. We've got relative equal lows there, plus the purge on this ultimate low here. Price comes back above the origin of the sweep, closes, and finds beautiful support there in order to move away. Now, technically, as we look at this just on a weekly scale, we have to say, okay, well, yeah, I mean, this, looks like there's a lot of upside room from there, right? We see we've got this order block here. Yeah, so if we draw this across here. Now, something that doesn't hold as much validity for me with this one is you kind of looking at the origin of the move that broke down, I suppose, because we've taken out that low ultimately that comes into it. You want to see a retest of it, maybe a little bit earlier sometimes, but we do get a retest of it here. So maybe this is what's capping price at the moment. Yeah, so let's just hold this in here. Now let's drop to our daily. Something actually, just because I've been rushing through these guys that I've been robbing you of, is looking at B Pro, right? Which is one of the key runs that I watch on the daily here. Like anytime you get a divergence or a key level swept or interacted with, and you're getting these divergences as we get here, start of this move here. You notice how it's catching these corrective moves. Well, we don't have to worry about those because it's only this one. Yeah. As we come down and take out these key lows, we're coming into here. Well, that low's been taken out before that, so that's not of interest. We'd then be looking at this low and saying this one here, when we get interaction with that and we break structure, that's when we look to jump on board. All right. Same way with this one, we get a sweep of a key high, price starts to break down, we then trade that to the downside. This one's the same, sweep of a key low, divergence, we trade that up. Now, I know these look like tiny moves, guys, but when we're looking to day trade, or when I'm looking to day trade, that's a 15% move just in terms of volume, not in terms of low to high, which is more than enough. All right. So we've got some bearishness starting to kick off here on the B Pro, right? This is telling us that the divergence is starting to kind of move, right? That means that we could be seeing some weakness. So that's always an interesting point to take on board. Now, what else have we got here? We see we're paying attention to this, right? We've got this huge move here, which would represent the order block. So we're not going to take that. This one here hasn't had a retest, right? So we're leaving this with what it is with the daily. Now, when we're in an up move or a down move, something that can be key to watch is when we come up here in this up move, we set this high volume down candle, right? This is an order block. So what we want to do is we want to see that respected as support. So when price moves away, respected as support, bullish engulfing, we continue on our way up, right? To the next point, high volume down close candle. We want to see this act as support, yeah? So that's where we get support from there. So in the same vein, now we've got these corrective moves coming in here. For the bullish case, we'd want to see this one hold, yeah? So if we draw that across to there, employing the same principles, well, if this is a correction, then we want to see price come into here, find support, and then move off. What it also does is it gives us a good target along as we come down into this area to say to ourselves, okay, if price is pulling back before looking to move further on, then this is a really nice area for it to do so. That, and obviously we can take our Fibonacci's, which will become a bit clearer on the lower time frame. But we'd say, okay, let's look at the golden pocket, where we are now from the golden pocket down to this order block, right? Does that give us enough tradable range from where price is right now down to here? Tons of it, 4.7%, 4.9% to there, and over 7% down to the order block. So now, you can shut that off there. And what you can do as well, guys, is rather than leaving a Fibonacci on your chart, you can always say to yourself, if you want to mark up the golden pocket, just mark it across from there to there, and then do something like that. Right, and then you know that that represents that level, because then when you move on to the lower time frames, right, you get those keen, clear targets. All right, so price came here, came back down, found bullishness here on the break of this. It's now come up. This is the key level that we're looking at for some kind of rejection, and now we've got a clear downside target. Now, obviously, on a 4 hour, it's going to be tricky. Again, I would trade this within what is known as a kill zone, right? Which is just basically a particular period of time. I try to always be present for the New York session, AM and PM, because I find that's where you get the most high volume of trading. But I obviously study London and look for what London and the Asia sessions have told us from the previous evening, and then obviously the London Open. But as we see price starting to break down here, and we've got a key target lower, you'd be looking for a similar kind of thing. You'd want to see highs run, you want to see a break of market structure, which we get here, a retrace to an inefficiency within this move. Sorry, zoom in on that for you. Yeah, so price comes down, there's the high, there's your change of character here. Yeah, so you set the low, lower high, break of that low. You then want to take a position within this inefficiency, and then you would be trading it down, targeting the lows. And again, we're kind of in a position here where we're kind of finding things in the middle of a move, right? So we've got a nice clear downside target. But as always, jumping into a move when you're just kind of in the middle of a larger move has inherent risk, because we might be right in our overall target, yeah? But if we were, we would want to have been in from here, right? With clear invalidation either here or here. Now, if we're looking to jump into this, and I know this is because of me, because I'm looking to target this at a 3:30 start, I've got inherent risk that I've got these highs, all of which could easily be run, yeah, before price comes back down. Because I'm so far away from the origin of the move. All right. So again, where you're timing your move and placement of it is really, really critical. But for me, just thinking about this logically, yeah, if I'm moving this now on a 15-minute, I'm saying, okay, well, what's capping the market to the downside? Is this order block? Right? Why? Because we've come into it, retested it, sold off, retested it, sold off, retested it, failed to close above, and now price is selling back off to the lows. All right. So we've got liquidity resting under here. Here's our golden pocket. Yeah. And this is a draw on liquidity to the lows as well. So, guys, I'm really, really sorry if I haven't got round to your assets today. I did promise, though, that I would finish on Bitcoin. So this one will be a little bit quicker because I've already got the chart. Here we go. So this is going to look nice and messy, I would imagine, once it loads. So once again, key principles are we're looking for high time frame liquidity, yeah, which we believe is going to provide the overall draw on price. Fermi, you're very welcome, mate. I hope that made sense. Anik, I'm sorry we didn't get around to doing STRJ or Sturge, but hopefully ANKR covered a few bits and pieces for you. If you are in and around the nest, do come and let us know and we can take a closer look at that. But here's our high time frame draw on liquidity, which is just simply above these highs. Yeah. And then what we're looking for here is more recency. I've got the fair value gap marked up here on the weekly basis, which I believe is drawing price lower. Then this makes up the key order block on the daily scale. Here's our inside bar, mother bar, inside bar candle. Yeah. This is just another mother bar within the same one. Principles always remain the same. We're looking for the highs or lows to be run. When that happens, if price comes back within the range, we trade to the midline. When we trade to the midline, we then trade to the lows, all right? But also internal liquidity targets like these equal lows here, right? So let me show you what I mean by that. You'll notice that there's equal lows here, that low, and there's also a few lows over here. They're relative equal lows, meaning that we've seen the market stop there on several occasions, meaning we believe there to be liquidity down there. When we extract that line forward, we can see what happens is when we lost the midline, we came into this level where we found support. Okay. Now, what we've tried to do here on Bitcoin is we've actually come back above the midline, yeah, which is bullish. We're coming back in to retest it here. So for me, we either retest this here, which we're doing now, reclaim bullish structure and make an attack on the highs, yeah, up here. If we then deviate these highs, yeah, so we come up here, deviate like this and come back below, then as soon as we're back within this range, we're treating it as a sign of weakness and we're targeting the midline, which is this dotted red line, exactly where price is sat at the moment. If we lose this, then we target the lows, right? I know people are sitting there going like, yeah, but if you target the lows, then why the hell did price reverse here? Well, that's what I was talking about when I was talking about internal liquidity, right? Anywhere we see equal lows, right? Or we see a key order block, for example, like this one, that's had a significance on price. Yeah, that's when we're saying, well, look, why this one? Why not this one? Well, this one's huge to begin with, so I would drill into lower time frames to find one that had more relevance. But the key thing for me here is this down close candle was tested here, 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 and when it ran the lows here and closed above, it flew to the highs, right? So it's telling me that there's buyers in and around here and below here. When we came into it here, again, it's very, very messy. You would want to see it cleaner than this typically. But there's no doubt that, first of all, we've held this. The second doubt is that we haven't really managed significant closes below it other than this deviation. So for me, that gives it significance, okay? So where we are at the moment, let me just clear some of this up, is we find ourselves at the midline, but we don't know if the midline is going to hold, right? But what we do know is we've got this mother bar high, mother bar low, right? Which is this two red lines here. So what we're saying to ourselves is under our theory, right? If price comes back within the range, we trade it from range high to range low via the midline, right? And you see when you draw these in the significance that these have. Right? So what happens here? Price comes down, sets the range, finds resistance at the midline, travels down to the lows, purges the lows, deeply. Now, like with anything, this then enters a new structure that's away from this range and it's in the larger range, for which this here is our midline. So now we've lost this midline, we retest it, we're looking to sell this off to the range lows via our internal liquidity targets, which were these equal lows and the order block. Now those rejected price or supported price came up, initial rejection at the 50, reclaimed it back above. Now, when we got back in this range, when we got this close, then we target the midline, right? So we would be looking to trade this from here to here. If it holds here, we look for price to do this, establish, right? Obviously not as ridiculously drawn as that, but that's the kind of idea, right? We look for price to establish itself here on the lower time frames and then move higher. It didn't do that, right? It had an interaction with the midline, sold off aggressively, closed below, of this, the mother bar low, and now we're holding here. Now this is either a deviation, in which case price is going to step back in the range and we look to trade it to the midline and then to the highs, right? Or this is a breakdown, right? We filled this inefficiency of this fair value gap here, So that's done now. That's been closed. We've now taken out liquidity above these highs and interacted with the midline. So for me, if we now break down and hold below this, the EQ of the master range, then we're looking to trade it lower into these lows and ultimately the mother bar low or mother bar lows that exist below those. Okay. So look, guys, I hope that makes sense. I can give you a quick example actually of that. Sorry, don't want to leave you just hanging with a 4 hour. For me, I'd be looking to the 5-minute chart, which is probably my favorite time frame to execute on. And anything where we have, let's look, say this midline here, is representative of when we've had a breakdown over here, right? We're simply looking, or I'm simply looking, I'm saying, okay, where's the order block within that, which we can see is here, right? And we get obviously the main one, which we draw out here. We get a rejection, Price takes out these lows, sets the lower high, and then the break of these lows here just make that a bit bigger, is when we're really getting interesting. And what we want to see here is based on this purge lower down to here, we want to see price come back into this inefficiency, this one here, right? In terms of how I would trade it, right? You could also trade this based on the breaker line, which is a strategy that I used to, good success before. You often see this line retested. We get the retest here. You can put your stops above the swing. Easy target, at the mother bar level here. And again, once we lose this level, we're looking for purges. So price takes out this high, because we're waiting for price to tell us it's ready to move, and then price takes out this low. So then when we have this impulse move lower, I'm taking it from here to here initially, because before we've got that data ahead of us here, right, I need my retrace to come into this green box. See this fair value gap here has to be within the green box. So it doesn't happen initially, right? Until we get to here. So if this was in my kill zone, this is the pattern that I'm looking for to play out down here, when we're within my kill zone. Because this happened in London this morning, right? It's a session I don't typically trade, or I can do, but I don't typically trade. I like to see how London plays out and then really focus on New York. But all we would do here, guys, our setup would be, as we just said, here's our fair value gap. We take the low of that. Our stops then go above the swing here. And then we've got a clear downside target of the 50 line. So when we get to here, I would then be flipping my stops to entry. So the trade's risk-free. And I would be de-risking here, right? I'd be taking, once we got here, I would have limit orders set to take a heavy chunk out of this trade, 60, 70% at least. Because I'm happy to book that profit and leave the remainder. Sure, you know what? Price could just run and just go down to here, right? And you're like, 12.62, it would have been a killer trade. Yeah, but at the same time, if price just runs up here and invalidates by getting back in this range, then I've lost booked profit. So that's how I trade it anyway. Obviously, risk management wise, and that is so important along with trade management. And that's up to you. I'm very, very happy to advise on what I do. And we've got some amazing resources over at the Nest for it as well. But please remember that good money managers and good risk management will outperform good traders, right? You will see average traders that have got exceptional money management and risk management that will outperform traders that are just seem to be nailing everything, believe me. So I'm really, really sorry for anyone who we didn't get round to in terms of the alt requests. Really do appreciate you guys all jumping on the stream. Love having you all in here. So just a few shout outs to you guys for coming on board. So obviously Fermi, Anik as well. Great to see you on there. Hubert, thanks so much for coming on. Really sorry we didn't get around to Cardano, mate. We will take a look at that on future streams. Menos, I Am Game, 222, Nemesis, 222. Again, really sorry, mate, we didn't get around to GRT. Remind me, we'll have a look at that. The Sun City's Finest, just reminds me of South Africa, which I love. BTC, Norbert, thank you very much for joining the stream as well. Imran Khan, great to see you on here. Ken as well. Leanne, obviously, massive patron of the site, loves the tea as well, which always appreciated. And Burned, obviously, and Craig Parker. Guys, if there's anyone I missed out, I'm really, really sorry. Really appreciate you all being on the streams. I'm going to let you guys go now. Do come and catch me on Twitter. You can catch me on BC_Richfield. Look, there's some offers in the description down below. You can come and join us now. You can get all of my calls for free. You can get all of the team's calls for free. We're running a really nice hot streak at the moment. And to be honest, our consistency through last year was really, really good as well. Highly profitable. You get access to all the calls, why they're coming in, why they're being made, descriptions of them, and get to interact with the community. You can get free trials. And you can also sign up and get all of those calls for free just by joining our partnership link with Bybit. So if that's of interest, guys, details are down there in the description. But as always, you can reach out to me through Twitter and get yourself a free trial for the Nest. Come and see if it's a community that you want to be part of, right? A community I obviously think incredibly highly of. We're all there through choice. It's not through any other reason. And we just want to help people kind of get to the stage that we've got to in life. So see if it's any good to you. You can try it for free. Like I say, if not, you can always come and catch me on Twitter and stuff like that. And if you've got any questions about the B Pro or anything else on today's stream, do let me know. And I'll be on hand to get back to you guys. So look, thank you very much for listening to me waffle on for an hour and 12 minutes. I like making the Wednesday ones a bit longer. And next week, I'll try and be even more efficient so we can get in even more requests from everyone. All right. Have an amazing week. Have a fantastic weekend. And a huge thanks and shout out to everyone again for joining the stream.